The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, more weakness in the soy complex led by soybean oil on Tuesday. Cattle also falling sharply lower after midday box beef prices took a turn to the downside on Tuesday. Hogs were under pressure. Quarter wheat did their best to bounce slightly after Monday's big losses. So I guess there's one small bright spot there in that graded oilseed trade, but these markets still looking kind of tough on Tuesday. We're going to try to make sense of it, put some perspective on it. Joining us now for market analysis, Jacob Burks with agmarket.net is back with us here on the show. Jacob, good to talk with you again, buddy. And a tough day again in these markets. Monday was ugly. Tuesday, not as bad, but kind of added on here to this bearish tone in these markets, man.
Yeah, I mean, to be honest, the way the markets felt, the way the markets traded, I felt good that we held, the 406, 407 range. The negative side of the one positive thing we had is we broke through the report day lows of 412 in the corn market. We come down, we go back and test them, and didn't do anything with them here overnight. And so, so what we have of optimism is not just that strong or anything. And the beans, I feel like the beans are technically traded a little bit here today, where they broke through the $11 level. Saw some additional selling come in, probably some fun selling. You had some very negative news in the bean oil complex. Pushed it down to 1080. And so we want to find some positive thing. If you look at the channel that's been provided here in the December or the November beans, we went down to that 1180, and that's kind of where that channel, bottom side of that channel, is going to catch it from the technical side. So hopefully we can get some type of bounce up from there. And wheat mark, I don't know if anybody traded wheat today or not, but it was just stayed kind of quiet and just went sideways.
Yeah, I mean, I'm with you. Corn and wheat held in there. Nothing really bullish to feed the market and give us a good bounce, but yet, getting a little bit of green in the face of all the pressure in the soy complex, I think was a good thing. In terms of D's corn, you mentioned that. Let's start there. Holding kind of that 405, 408 range, about a nickel above that psychological $4 mark. I think we saw what happened with beans. We broke through a psychological level and, another 20 cents go off. But in terms of corn, I know there's plenty of farmers who are undersold in new crop corn right now. Yeah. I mean, realistically, could some of that market sentiment hold us above 4 here for a time? I mean, what do you think of this corn market, Jake?
I think that the one thing that the farmers not selling has done is put some pressure on some basis levels where we've seen some good opportunity and good basis, have to come out and try to, buy some corn. So that's been one positive thing out of farmers holding. We saw in the quarterly stocks report that farmers have 63% of their corn left over. And I know we're wanting to talk new crop corn, but when you look at that situation, you think about 63% of the corn still in farmers' hands. How much do you think that the farmers went out and forward contracted when it was at $5? Not very much. Unfortunately, this is something I kind of take seriously. In my job, I'm talking to producers every day about marketing plans and about their livelihood. And when you have producers that call you up in the markets at 406 at one point today, and they're talking to you about their break evens and what this does for them, it can be something that I take very serious, especially when you start talking into mental health and stuff like that. And so I don't take it very lightly whenever it's opportunities that are missed or opportunities that are gone. It's a lot about what do you do now and how do you manage that situation. So it's something that producers have looked at better opportunities in the face. But the questions right now that I've been dealing with every day is what do we do now? And so I think that's something that's very important for you to sit down and think about right now.
Well, and all right, let's take the conversation this way a little bit. Whether we're talking old crop or new crop, corn, beans, etc., a lot of farmers, to your point, frustrated. Might just be throwing their hands up here, saying, "I don't know what to do. I don't know how to manage this." At this point, maybe I just let it ride as long as I can. But I know with old crop, for instance, I mean, not much time to let it ride here, really. No. I mean, so what can you do? Is it more or less minimizing your losses and minimizing the risk that still could be on the table? And I feel like something like that's probably going to have to be the case versus a hope and pray type situation.
Absolutely. And so there's a couple things to notice out that just first thing first is there is carry in the market, right? So the bin situation is available to look at. Hey, you can add some value to that corn. You can look for better opportunities and basis out there with just using those bins. Going back to what do you do with the stuff that's in the bin? At this point right now, if you're looking at a basis level that is attractive or something that you're noticing that, okay, that basis is above normal, take advantage of it. Take a look at getting that. If you want to, if you're scared to death that you're going to miss out on a rally, we can put ourselves into some cheap calls or do something of that sort. I use the term of getting creative with marketing. And what I mean by getting creative is using some of these option strategies to help add value to your sales. The one thing that I like doing at this point right now is finding an opportunity, a place where you would be willing to make a sell in corn. For example, if we're thinking December corn at 470 futures would work out, that is not a problem for me to go out there and sell that call and dare the market to go there. Obviously, you want to work with someone about risk management and make sure that you're not getting over your skis or whatever. But to the point where you can collect the premium, put that premium in your pocket, and then if the market gets there, then you're able to. That's where you're going to make a cash sell at. That's where your HTA would be in essence. So I think combining those type of strategies with some floors to make sure that you're not selling 350 or 320 corn is wise.
It's regional too. I think that's part of it. I mean, obviously with the basis, but you got folks in the Northwestern Corn Belt who are looking at crops this year that might not exist now after all the flooding. It's going to come down to what harvested acreage looks like, et cetera, et cetera. And then you got growers in the Eastern Belt who are getting timely rains from Tropical Depression Barrel now, and crops in the East are looking really good. So that's something too. We see that every year, right, Jacob? I mean, every year somebody wins, and there's always a part of the country that kind of loses, right?
Yeah. So I think that regionally, and the other thing too is hard to come on a public forum and say, oh, it's not a big deal that there's flooding. It's not a big deal that there's holes in the middle of the field. When there really is, when it's yours. But the problem is the corn right beside that hole looks really, really good. Uneven stands, and how does it pollinate? Coming some heat. We're starting to pollinate now. We're going to get some heat this week, so maybe that affects it. All of that stuff is very well true, and we might find out something different when the combines roll through. But as far as assessments go right now, whenever you look at the broad aspect, I mean, what did Ohio and Kansas both had an 8% increase in good to excellent? Again, the 70-mile-an-hour test and all that good stuff, I understand. But the fact is, it's a pretty wide spread of some very vibrant green, good-looking corn that's standing out there, and beans are also right there in that same boat where this moisture has not been a problem now. Now we're getting moisture in areas through the southern part of Illinois and some dryness areas, northwest Ohio, the eastern Indiana. And those areas are getting some very good, slow, good quality rains, right? As we see this hurricane go through there, the Delta area. I mean, my folks live in Arkansas, and it's just very, very nice soaking rains that just came through here this week.
Yeah, I think about the wheat markets too. You mentioned wheat was quiet, but harvest for winter wheat's been good. Spring wheat, 75% good to excellent nationwide as of Sunday. So, I mean, wheat crop looking good. We're still watching a lot of the issues overseas, Russia, Black Sea region, but it feels like wheat's kind of in the same downtrend that quarter beans are caught in. And largely, to me, it feels like it's a supply and demand issue. We have all of this supply or this projected supply and not enough demand out there for U.S. grains right now. It's, I think, the big gorilla in the room, right?
It's, we looked at what the USDA has done with the exports. When you look at demand, domestically, our demand's been, relatively strong, stayed very consistent. We've seen increase in demand of beans with the new bioenergies. That could possibly be, continuing to increase. But I would say that when you look at the outside the export demand, you've seen what we've done in South America. That story has been, very well documented of how much production that we've seen increase there. And then, with these genetics, and with this, after last year and seeing the very dry growing season and still producing of 177, that, okay, the 180 to 185 is possible at some time. Is it this year? I don't know. But I can say that having that really good yield on now 91.5 million acres as opposed to 90, that does not set well with a market that sees an export to unknown on Monday and then just no follow through now. And so I think that we got to start seeing some of that China demand, basically China, some major export demand, to see what price do we find like there's some value buyers here. I hope that the $4 level is a psychological level that end users increase their purchases. Maybe they ramp up some processing. Maybe we start getting some exports, but we've got to see that place where we find value in the export market, because right now the production side of it seems pretty well on a good track. Anyway, let's just say that.
And until we get some of that demand, funds, I feel like, are going to remain heavily short in these grain markets probably as well, right, Jacob?
Oh man, Brian made a very good point here today that when we were looking at what happened in 2014, let's compare the 2014. We see a record position at the funds here in the corn market today, anyway. But as we fell in 2014, the funds never went short. They stayed long in a long position. So the funds will direct some of the market. But yes, I think the opportunity for them to expand their position since 2018, when they've increased that level that the funds could actually hold in the positions. We've seen the record, I think in 20 or 21. Now we broke that record. I don't know that it can be 450,000 contracts. I don't know. The problem is that when the selling comes, it's not coming all from the funds now. It's also coming from the relatively long position for where we're at this time of year of the commercials. That means the farmers are going to have to start selling. There's going to be some selling that comes from the farmer as well. I think, to me, that's why I'm throwing up this big, huge yellow flag of still use something to protect yourself from seeing those 320 levels. Do I think it's going to stay there forever? No. I think that we'll see some opportunities. Somebody will be willing to come in here and buy this corn at some point. But I do think that we can see those levels, and you don't know how long, but I think we can see them.
We're talking with Jacob Burks from agmarket.net here today on the show. Let's talk livestock, cattle. Another day where we kind of started mixed and then just collapsed at midday. Box beef took a hit. Seemed like that was the only item I found here that drove the futures lower. Yeah. Is that the case? Is that what you saw? Anything else on the day Tuesday?
I think so. I mean, first of all, let's be clear. I wore my red shirt last time I was on, and I think you personally blamed me for the fall of the market. I tried something different today. It still didn't have that success that we were looking for with the green. But yes, I do feel like you had something kind of boiling here with the cattle market in both feeder cattle and live cattle of like, we have thrown everything bullish you could take at this thing, right? So you've got extremely high cash levels. But the funds, if you look at the charts, we just couldn't break through some of that topside resistance. If you look at the feeder cattle, especially, they've been bothering me and kind of worrying us all a little bit because they were just capped out at those May highs. We went up, we tested, we couldn't break through them. And then today, if you look at the chart, doesn't look very good on the chart. We broke through the bottom side of that pennant formation. You'll probably need to see it confirmed here today before we feel like it could be a breakout below it, or tomorrow, excuse me. But that didn't feel very good whenever we saw the box beef come out. I'm assuming you saw some algo trades. I'm assuming you saw that was probably one of the things that they were waiting on, is when does this demand break? We've talked about it a lot. You saw in the stock market here in the S&P and in the NASDAQ, we saw another record levels hit. So we got if you're looking at measuring of the economy and measuring of how our growth is looking. We feel like, okay, we're strong there, but then we're also wondering, hey, when does that retail buyer, when does their money decide to run out and maybe not look at buying some of those high priced box beef and that high priced food? And so then when you see this break in box beef today, I think that was kind of a signal to some of these algos, some of these managed money traders that says, okay, this thing could be over. And then I think that hopefully we can see some rebound and find some support down here. But that's sure what it felt like here at 11 o'clock this morning.
Well, and I think about this. This is not a typical cattle market right now. I know we could see some seasonality here, but at the same token, probably, the old adage, one day doesn't make a trend. So to your point, I mean, if we can get some rebound here, then maybe we're okay. But if we see some continued selling and follow through Wednesday, Thursday, even Friday potentially, then I would be more concerned, wouldn't you?
I do believe that's, that could be the case. I mean, the thing about it is the cash hasn't followed it yet. That would be a pretty big, if, this week we see cash come down. I mean, you look at our beef production's not that far off of last year, just because we've been able to feed some cheaper grain, and we're going to continue to get cheaper grain. But I think, you nailed it on the head whenever you said we got to see some follow through this. First of all, seasonally, we should be seeing some type of pullback. We're coming through the 4th of July until we start seeing Labor Day buying. It would be hard pressed for me to see us keep these box beef levels at this height for that long, sustain it. So to see it pull back, I don't think it's the end of the world. The fact of the matter is we haven't done anything to rebuild the herds, and we haven't lost any cattle right now. So the supply side of this, just like we talked about on the corn side, how it seems very, very strong, we haven't really made a whole lot more cattle. We made some more beef by adding more pounds to them, but we haven't made any more cattle, and that herd hasn't been rebuilt yet to see that cycle really start to flip over yet. So, trends have to trend. It doesn't just happen in one day. We did break out, and it does look ugly. And I think that these type of moves is what will make people realize, hey, we're at a very high level right now. We can take a couple bucks, $10 out of this thing, and not that hard. So, looking at what kind of opportunities you have in front of you now is like looking at the $5, $5.50 corn last year.
Hog market, no more triple-digit losses there. Monday looked like it's consolidation day, but then more losses here in hogs Tuesday. That's a market too that's just been struggling, Jacob.
Yeah, it's felt like you've been a Razorback fan your whole life. Is what it's felt like right there. And the hogs just keep disappointing you. You look out into the deferreds. I think that was probably the most disappointing thing, is how the last 2 or 3 days here have traded out into that December and that February timeframe. And we can sit and talk fundamentals. You can talk all about the amount of hogs that we have on hand, the cold storage. But realistically, when you just look at the charts and see that it's a falling knife here in the last week, that weekly chart's getting down into some of those those about 2020 levels. I think today, if you look at a continuation chart on the weekly chart, we went through the support that we had this last spring, and then the support levels that we came down to and bounced off of. And now you're getting into some charts that look like, if we break through some of these 64 levels, then we'll probably end up seeing some 62s. And then the next spot to catch us is probably the 52 level. So it can be, even though it looks ugly, and we've seen a big push down from where we were back when we thought China was going to be buying a lot of our hogs, a lot of our pork. So now it just feels like it's went a mile, but there's still opportunity to fall more.
A lot going on right now. Got to do your best to keep your head about you, ask questions, have good people on your side helping you make some of those tough decisions. And I know folks could reach out to you guys there at agmarket.net and have a conversation, take a look at a lot of stuff you guys have online, resources, etc. I'm sure all of that can be found easiest is just going to the website, right, Jacob?
Absolutely. Agmarket.net. It's in the name. We have a lot of intel, like you said, and we'd just love to chat with you and kind of go over some ideas and thoughts. And, risk management's what we do.
Jacob Burks with agmarket.net. Jacob, thanks for the time today on Market Talk. Always appreciate it. Have a good one. We'll talk to you again soon.
All right. Thanks for having me, Jesse. Appreciate it.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.